Good evening. Welcome to my back-to-back video. As promised, um, yeah, we're gonna talk about Upwork. This is this is gonna be an interesting play. Um, I have talked about this in a prior video, which had a little, how do you say, like a little gift reveal or whatever. I have not pulled the trigger on Upwork just yet. Um, but that's probably shortly to change here soon. Okay. Let's look at it Upwork real quick. Let's look at what I'm looking at. So just to recap, this is a company in California, headquartered in California, publicly traded at little under a billion and a half. Okay. Um, I guess approximately 1.48 billion. They went down a little more today, so maybe a little bit less of a market cap. This company holds net cash, all right, on the balance sheet. So they got over 100 million in cash in the balance sheet as a net cash position. Price action. This thing's been going down. Even on the 1 year, they're up 37.5%, but their valuation is very cheap. We're going to go through that real quick. What do I intend to do? How aggressively do I intend to build the position? How many shares do I want? What do I think the timeline I have to build the position is? We'll talk about that, okay? So let's go to some stats here. Let's look at the short float. This the percentage of shares outstanding that's short is 10%. The short float running is a little over 12%. So not too crazy of a short interest. Now, that is above average as far as like short interest on a lot of stocks. But in this short cap, in this small cap, I think you're gonna these stocks are attracting more of the shorts now because they're being neglected by the market and there's less buying pressure happening. So it is what it is. And personally, when I see short floats go up on a lot of these undervalued names, it tends to actually attract me more to the position. As the saying goes, what does it say? I love haters. So I mean, you gotta have some haters to give you some opportunity and I guess fuel some stuff. Fuel some motivation and inspiration. Um, it's like that when it comes to stocks, but except there's a pressure aspect in the float that that makes things interesting, so to speak. So yeah, I mean that doesn't necessarily mean you have to have a lot of like the stocks that I go into. I like to see high short floats. No, I mean all I'm saying is if the valuations are pressed down, and I like to see some short float percentage. Okay, if there's because there's that makes it to where there's an opportunity for an actual squeeze of a run. Not so much at maybe sure, not so much at maybe a 12%, but who knows? These shorts can pile in for whatever reason, and that can go up. I mean, we've seen different stocks like SoFi and different other stocks. Short float gets up there pretty crazily. But anyway, that's something to consider. All right, so going back, all right, Upwork. All right, let's look at some of these fundamentals. Like I said before, they're net cash, so that's a positive. All right. From a price to sales aspect, in fact, Seeking Alpha has their valuation grade of a D. My valuation measures, I have a grade of an A. All right. And, this is and a lot of that has to do with the growth aspect of things. And this is why when I go in and I look at their forward PE metrics to how much growth I'm projected to get, we're looking at under a peg of 1 now. So we're trading under the peg of 1. The growth isn't priced in. So there's opportunity for multiple expansion. The guidance that I'm getting from management is they're targeting their EBITDA to expand up to up there to making it to where maybe the net income hits 25% in 5 years or something. So I mean, this thing we're gonna see, and this is just barely at the stage of profitability. It's a profitable company. All right, they got net income now. They have free cash flow now. So there are free cash flows, and there have been free cash flows running for quite some time. They're buying back some stock. Um, I mean, all of these things are very attractive. You got the peg under 1. Your EPS projected for next year is $1.09 a share. So if I pull up my calculator here, all right, and we do $1.09, and we multiply by 10 times. At $10.90, you are getting a 10% EPS yield. If they hit the target, of course. You're getting a next year's EPS yield to the price to EPS yield is 10%. I like my shares to be earning. I like my growth stocks to have EPS and actually earning some sort of earnings yield. The growth is not priced in, so this is what I'm getting. I'm getting next year's EPS to this price yield is like 10% on the shares. The peg is under 1. We have a net cash position on the balance sheet. They got free cash flows. They're profitable. Their management has their head on straight. The TAM, the total addressable market on this thing is crazy. This thing can continue to deliver double-digit growth beyond the eye can see on any projected measure, given the market of freelance. All right, I'm very bearish on the economic landscape of jobs and employment, and I think that this is going to be the answer to a great hedge and a great opportunity. All right, for myself to have exposure into this sector and industry. All right, there is no bigger model. All right, so analysts are having problems modeling this thing after a bigger company of a proven established business model of freelance, because this is it. Upwork is the thing. This is the new, to me, this is the new Shopify of employment. Okay, this is the Shopify of employment, and I intend to build up a decent sized position. Given the TAM, given the valuation, and given all these, I'm willing to get in here pretty aggressively. Now, how long do I think that we are on a downtrend, and how long do I think that I have to buy the shares? All right. Well, I mean, I can anticipate this thing going down up until earnings. We'll look at some aspects of that. When we pull up an options chart, all right, there is not a lot of resistance on buy side for puts, which means there's not a lot of buying pressure to be down here. So this thing can go down, and the shorts see this and they can start piling in. After earnings, there's a little put wall here at 7.5 strikes. All right, and I mean they're asking. I guess the premium is asking almost $1 per share. So, I mean, and there's some puts here going down from 12.5 strikes and going down forward. All right, but there's a lot of pressure here at 12.5 strikes for calls. And short-term calls and going out a little bit. All right, going out to October. So I think I have a while to buy this. but I don't have too long. I don't have like as long as a Navatos, okay? Where I think I have a year and a half to buy this thing. Maybe I got 5, 6 months to buy this thing, if that, if I'm lucky, you know. But I'm gonna start coming in it real aggressively, starting to build this position. I wanted to wait until I had EPS yield, a forward EPS yield at, of 10%, so 1090. I just didn't decide to buy. I wanted to exercise a little bit of patience. I'm hoping we go down tomorrow or a little, going on to the week, we get a little more sell pressure on this thing so I could start really getting it in, right? So, how much of a position do I want to build? We'll pull up what I got on my portfolio. All right. Um, I got rid of that. I got rid of one of my positions. All right. And I think that there is a spot right here ready for Upwork. And I want to consolidate out of these options. I think PayPal may run, so I'm holding on to them for a little bit. But yeah, I did. I mean, Upwork is going to have a position in this portfolio. It has made the cut into the inner circle of growth stocks in my portfolio. All right. How long is it going to last to where Upwork's flat? I have no idea. Honestly, I wouldn't be surprised by the end of the year. The stock starts running. People start realizing the thing is so undervalued. So, but I'm hoping I get in and build out this position real quick. So that's my take on Upwork, and the next move I'm making, as far as the next stock I've identified. Um, and I hope you got some sort of sense on the tacticalness of how I'm moving into these positions, how I see things, and how I gauge the value and the feel of the value that I'm getting. Um, and I hope you're getting value out of this channel. If you are and you're interested in this type of investing, which is aggressive growth stock investing, in the small and mid caps, consider subscribing to my channel. I cover a lot. I cover not just the stocks that I'm actually in, but people make requests and they want to, hey, what about this small cap or this company in general or what have you. I do video reviews on those too. And if you want me to look at a little company, comment down below and I'll get to work and I'll start doing some analysis on it. Link down, a little quick plug. Check out the Patreon. There's a lot of growth like-minded investors that are starting to subscribe to that thing. They're DMing me. It is a new Patreon, I admit, but I am still posting a good grip of content. You get access to different products included in your Patreon membership. Once you subscribe to the Patreon, you can actually just download those products and spreadsheets and different and all that good stuff onto your own computer, and you'll be good for, you'll have those products for however, forever if you want. And I have instructional videos on how I assess different things, and I have the hidden gem collection on there as well. So stuff to look at, something to consider. But yeah, subscribe. I need more subscribers. I need this to actually be something. I want to see the channel grow. I want to see it grow properly though. So subscribe if you're really interested. And with that being said, hope you all got value. Enjoy the rest of y'all's week.